Let's now discover innovative approaches to streamline the mortgage application process, reducing approval times from weeks to mere days. Explore strategies to enhance customer experience through real-time update and support, revolutionizing the borrowing journey. Delve into the challenges surrounding document verification and processing and uncover solutions to expedite these crucial steps. Join us for an engaging panel discussion on mortgage loans moving from 3 weeks to 3 days. Ideas to be baseline customer journey, along with our next panelists. Ladies and gentlemen, I request you to kindly settle down as we would like to call on stage with a very warm welcome Sudipta Roy, CEO L&T Finance. Let's have a huge round of applause. Mr. Sandeep Menon, founder and MD Vastu Housing. Duraiswamy, CEO Sundaram Home Finance. Mr. JK Vishwanath, President and Head Corporate and SME Banking, DCB Bank, along with our moderator, Sameer Singh Jaini, founder and CEO, The Digital Fifth. Ladies and gentlemen, once again, I request you to settle down and let's give these panelists a huge round of applause, please.
Thank you. My request is if we could all settle down, guys. My request is if we could all settle down, it'll be easier for everybody to work. So thank you, guys. I think, so this topic itself, the rebaseline journey is actually linked to what I'm experiencing right now. I'm trying to buy a house and not a home loan, okay? And technically is the case, or even if you're running your business, you want working capital and you want to do a lab. But you're doing a lab because you need money, but you need money now. Now, the whole process of figuring out how to get credit is become very easy for unsecured. But secured should be ideally good, right? Because it's backed by actual property and something else, but it's not still good, right? So I think I wanted to figure out who actually can teach us. And I think my sense is that we have best in the country to talk about, maybe even best in the world, who are building it up, scaling it up. So I think as an opening remark, if maybe Sudipta, you can guide us in how you are visualizing this industry to change and what work can be done to ensure that mortgages and any of these home loan journeys can be dramatically different, and maybe a quick pointer also that does it impact P&L.
Yeah, thanks Sameer, and thanks for inviting us onto this panel. You know, I think this is a very interesting topic, and as you know, I'm not a career mortgage person, right? So I'm mostly a unsecured lending person, and in unsecured lending, you know, we have digitized all parts of the process. So it gives me a good, and over the last couple of months, you know, when we have started looking at this project with a new lens, it gives us a good outsider's perspective to come into this industry and try to see as to what portions can be digitized. Now, I think one of the differences that mortgage has vis-a-vis any other product is that probably mortgage is the most high involvement financial services, retail financial services product, because as you said, you said that you are not taking a mortgage, you are buying a home, right? So I think that's the first starting point. When the customer starts looking for a mortgage, obviously there are various stakeholders in the process. That the customer is a stakeholder, you know, the builder, or, you know, if you're building a house ground up, then it's different. But, you know, the builder or the developer is a stakeholder in the process. The lender is a stakeholder in the process. And in the mortgage community, the broker or the originator or the DSA community is a very large stakeholder in the process, right? So I think the problem that we have is that this industry is fragmented in nature. Why? Because there is very low digitization on part of the builders or the developer or the builder community, very, very low digitization, or there is no organized digitization. The second thing is that though the banks have digitized the front end, that means in your initial loan approval process or to get you a soft sanction, some banks have done it, some banks and lenders have done it very well, right? But the fact is that the process after that is fragmented and fully physical. And the last part is that the entire disbursement process where, you are given a document with 30 signatures. In fact, in my previous organization, when we were actually looking at some of these processes, we picked up the mortgage document and actually counted the number of places where the customer needed to sign.
32, 42?
It was upwards of 30. It was upwards of 30. So I think the solution is not easy. The solution is that all the segments of if you have to move it from 3 weeks to 3 days, digitization has to happen on an even keel across all segments. In fact, as I probably would, take you to some of the global parallels which are there. For example, if you look at the US market, for example, the US market, the mortgage data or the mortgage valuation data is at an order of magnitude completely seamless. If you go to Zillow, right, and if you look at and put a pin code and if you look at exactly the address, you get fully digitized records of that house for the last maybe the number of years which the house has been in existence, when it has got sold, what value it got sold, so that the valuation becomes completely digitized and easy. So in fact, if you if you look at Australia or you look at some parts of Europe, the entire mortgage layer the government has digitized. The land records are digitized, the house records are digitized. I think that is the first step, wherein when a builder puts his inventory online, probably if the builder can digitize a part of his inventory, which is again a very inexact process right now. In second sale, it is not digitized. So if the second sale layer gets digitized, then it will move. But again, these are blocks. The second sale or the resale part, if it's get digitized fully, where some fintech builds a layer where every streetwise, every house, organized sort of mortgage is available, the valuations are available in a transparent way, then the second resale digitization becomes much more easier. So that's the second layer, which is basically the availability layer. The third layer is the underwriting layer. The underwriting layer is also very complex and manual. When we measure mortgage underwriting, a complex file can take anywhere between 3 to 4 hours to underwrite. A lesser complex file and an easier file will minimum take 1.5 hours to underwrite. And this is where we think over the next couple of years, for example, if you were to build a underwriting co-pilot, train an underwriting co-pilot using some AI tools, then if the underwriting co-pilot actually go through templated data, look at historical underwriting, sort of tracks, and prepare a CAM which is presented to the underwriter in a very fast and a coherent fashion, then the underwriter's heavy lifting also becomes much more easier. And I do believe that the underwriting process actually can be on mortgage, can be crashed from 3 hours down to 10 minutes using technology. So this is a work in progress. Obviously, various organizations are at various points in this line. But I do believe that the digitization of mortgage underwriting process will go through a phase shift in the next 3 to 5 years. And in this process will give rise to a couple of fintechs in the country, which will turn unicorn in the next couple of years.
Phenomenal. I think this is good. This is good. So, Sandeep's introduction happened to me during my DCB days when Murli told me that look at that guy who's building with a couple of guys so much of tech and you guys need so many people, right? I think that was how I got introduced to him. Yeah, I remember. Maybe you would have heard those dialogues from Murli, right? So Murli is DCB CEO as one of those mentors for, I think, so many in the industry as well, right? So, and Vastu, from the affordable housing perspective, ideally should have started physical and digital should not have been the more core criteria. But when I met you first time, you were all digital and all of that, and your team has done a fab job. So maybe you want to talk about how Vastu has sort of conceptualized this digital journeys, and of course, it needs physical piece as well. So how do you balance it out?
No, Sameer, thanks, I think. And we had a, late mover advantage. We had a few affordable housing finance companies. I had worked most of my life in banks and foreign financial institutions. So from our perspective, when we wanted to start something greenfield, and we had a couple of years in between where we could look at a few things because our change of ownership and license and raising capital took that kind of time. So one of the things that we actually thought was that legacy systems, legacy approaches, 20 different Mickeys for customers to talk to, or within the company, 10 different systems. So let's say one integrated customer view and put everything together in one place. So that's how we started. And we didn't have a lot of capital. We started with 50 crores of capital. But we built a tech organization where we said that the DNA has to be build what we can, which is externally focused from a customer perspective. So one of the things that we did was that we will try and see as much, except from a regulatory perspective to be paperless in our entire approach. So whether it was getting salespeople and trade people who would do the field work and the PDs to put everything on a phone and put all the data on a phone, to build automated CAMs, to have scorecards that today risk rank 70-80% except a couple of markets, and to make sure that a legal agreement comes out of the system fully filled, not that after 3 months or 6 months when you're waiting for an audit, you sit overnight and fill it, which I myself had done in banks. So I think it is important for us at that point of time to do something different. For us, it was a right to win and execute. And what has this helped us today is that we continue to build on tech, and tech is like, you can't build on top of tech, one after the another. The biggest challenge is that you have to be willing to let go. So our platform, I think we have given up and rebuilt 2 or 3 times, which essentially means that if you are on iOS 8 or 9, you move to iOS 12, you change a lot of things. Then from iOS 12 to 13 or 14, maybe you won't change too much. But come iOS 16, 17, you have to dump again. Same how Android would have worked. So I think that is very important. And also to understand along with that, that the speed of execution of the field team depends on training. Training on use of technology. One is to build technology and say we have it and have another bunch of people doing data entry. So I think today there is so much of opportunity in India compared to where we were 5 years. So from India Stack to a variety of other things, if you use all the APIs, and I think all the startups which are doing a lot of stuff. So like so far we would have built all our tech, but today we are very open to partnering with some of the young startups which do a lot more stuff because we've also grown to be a big company. So we may not be as agile on the tech side as we were, and there are a bunch of people who do this so well. So integrating those APIs, having a one API structure and making sure that data is used. So whether it is the account aggregator network for bank statements. So you have to move from a situation where if I ask you, Sameer, as a customer that I will give you a loan and can you give me these documents, to move to a stage, can you please give me consent and I'll do this. And then let's demystify the mortgage business into saying that you have a legal, you have a technical, you have an RCO, which is a fraud control, and you have a variety of checks. So today we do a lot of stuff, a lot of good companies do a lot of add-ons. So whether it is Perfios, whether it is variety of other things, a lot of things have come in which you can use. Along with that, you can today get all legal records, all other records. Most good states, land records are digital. So I think when Citibank started mortgages many, many years back, or when HDFC started, the legal and technical was very important. But today, you can pretty much build those capabilities, and good companies have built it, I think, very well in-house. So you don't need to do that. And when your own people meet customers or you have so much of digital verifications available, can you make lending a lot less intrusive is a very important thing. And today that is genuinely possible. And when you make it a lot less intrusive, you're a bit more customer friendly. In a process which is say 7 days to 20 days, you generally not. But in a 2-3 day process, it's a bit more engaging. It's a bit more transparent. And also the middleware that is available in terms of physical people and influencers, the relationship between the lender and the borrower improves a bit. So I guess from all those perspectives, it is absolutely the right thing to do. And from our perspective, I think it's done a lot of good to our P&L. We continue to grow at good pace without adding more people actually and redeploying people. And the underwriting processes, I think Sudipta said it very well, that there is a genuine opportunity for a mortgage file not to take 1.5 to 2 hours, because for us, all our CAMs are automated. I can tell you by location, all the properties that are funded, what is the ready reckoner value, what is the market value, what is the benchmark. All our valuations come in digitally. We don't take physical paper. All our values have to come in. All our billing happens digitally. So I think all of those things will do us a lot of good. And so let's assume that a per file credit cost of processing a file could be anywhere, I'm just talking from what I understand, correct me if I'm wrong, between 12 to 15,000 per file or 10 to 12,000 per file, depending on the companies and the intensity of the work that they do. There is a genuine opportunity to 6,000-7,000 rupees there. And that's game 6,000-7,000 rupees there you can change. I'm talking about a per file cost. And that is game changing because the margins are not going to remain. So I think survival of the fittest is only an OPEX game. So HDFC built such a large business because they had single digit of 3,000 people built what they built. So I think that is genuinely possible in the mortgage business today with all that the government has done, ONDC or everything else, and what the payment companies have done. I think the right partnerships and figuring out that the bane of India's consumer lending has been very, very small ticket sizes, which have actually led to a lot of operational risk and credit risk, and being in situations where you go and open a lot of markets, then you have a fraud, you have an integrity issue, or you have a valuation issue. Then we say that, okay, now let me shut this down. Or a new guy comes in and says, okay, ye to yaar usne kiya tha, abhi I'll solve for this. So I think that patience and ability to build slowly is important. And today with all the tech and the bureaus being 20 years old, it's a massive opportunity. And for mortgage penetration from 11% to go up, I think this is the best way.
Fantastic, fantastic. So, Lex, from your perspective, you are in the journey of building digital and the process goes on, but maybe we'll not go into process, kaise banta hai. More importantly, that how as a CEO you are thinking ki why you should do it, what are the business benefits you'll expect, because the driver is that it's not customer engagement and happiness is key, but top line, bottom line will come largely through that as well. So how do you visualize that change? Because as we move from 3 weeks to 3 days and maybe less, paisa banega ki nahi banega, and how do we ensure that the customer also gets that benefit? In fact, one point is everybody is using digital, but the benefits typically are held back, and you retain in your P&L, right? So that's something. So will it get passed back to the customer? So any thoughts on overall why you should do it?
Thank you, Sameer, for having me here. And it's a very interesting question that you said. In the first place, why would we do this whole thing about digital if it doesn't make business sense for all of us? I mean, we are all here because digitizing makes business sense for us. And before you even get to that, I want to put this question: what is digital? What is digital to us? Is automation digital to us? In some point in time, when you scan documents and, move from physical documents to scanned documents, we used to call it automation. So there are several apps that are available for parts of the process that, Sudipta talked about and Sandeep also mentioned. There are several apps that are available today to do parts of the activity. And typically, when you are running a business, your first question is, does it make sense for me? I want to buy this app. Before you even ask what it does to the customer, what can you save? How much productivity will you get out of buying this app? Are you going to save cost? Are you going to, redeploy some manpower or not hire people because you're buying, in making this investment in software, etc. So we do go through those questions first before you even get down to digitization. Look, at the end of the day, we don't do digitization for the sake of digital. We don't want to be a digital company that doesn't make money. Eventually you have to make money to stay in the game. So therefore, you've got to make business sense for you to make digital. And, certainly it does make, when it makes business sense, I'm sure it does make sense to the customer. When you reduce turnaround time, you release productive time of the back-end team that, Sandeep talked about. A lot of, processes that underlie a mortgage processing business, credit, legal, technical, operations, etc. But the bigger challenge, even before we could get down to 30 days to 3 days using digital, is the manual processes itself are fragmented today. No two companies do the same processes the same, whether it is legal, technical, whatever process that you take. So unless you kind of standardize those first, digital for the sake of digital will only mean, you'll go digital and you'll make those investments, but it's not going to pay off in the short to medium term. You got to get those processes right to see the results for ourselves.
Thank you, Lex. I think JK, I learned a lot of credit under you, right? Technically, I remember when you were driving those changes in the bank, there was so much happening, right? And honest answer is that before that, I had never done credit in my life. Okay, technically zero. So I think the journeys you build and the process you build, maybe you want to talk about quickly about when you do such large transformation and you sort of automate process and bring out that. What is the experience of building it up? What pain points? What was right? How? And maybe in last 7 years, so much more has happened. You are way ahead of time, I guess. So what is the experience and what do you see it happening now? And you can also give your corporate or MSME and all broad basis because your experience is wide.
Thank you so much, Sameer, and thank you, Digital Fifth, for having us here. And my co-panelists, thank you for adding value to myself, and I'm sure to all of them over here. Before I get into the core of the question, one of the things, Sameer, that we do is, let's look at this. What we are trying to do in mortgages is what we, at least this age group, expected a check to clear in the banking industry many years back. It took 7 days for an outstation check to clear. Okay, we have grown up like that. Many of you might not know it. Today we are saying give a mortgage loan in 3 days. And again, I'm coming to the mindset because I think we are a generation of Amazon. So everything that we do has to be quick. Whether it is growth, whether it is life, whether it is marriage, whether it is girlfriends, whether it is loans. Everything has to be quick, right? So that's the first thing. So in that process, if you see, you have to be with the times to be relevant and stay where you are. One is to have growth and one is to stay where you are and have relevance. And in that, digitization, I think, comes in because the nature of the customer, if you see the demographics, who were borrowing 15 years back were the 40 pluses. Who's borrowing today is the 20 plus and 25 plus. It also has to do with what economy the nation goes through, because when your GDP grows at this level, and they say India will grow till 2047 and beyond with the government policies and the growth that we are having, the need to grow and the ambition to grow has been fueled. Okay? And one of the first things is that is why mortgage loans are very good in terms of repayment, because it has a high level of moral suasion. Right? People hold that loan. They pay that loan more than any other loans. But in that process, then you come in, how do you get into digitization? One of the things we did, Sameer, was, and you were part of it, very much part of it, was first we thought about 3 things. Before even you got to digitization, you first look at your processes to say, what can you simplify? Look at your processes to say, what can you simplify? Next, look at it to say, what should you eliminate? First you simplify, then you eliminate, then you automate. Okay? And like what Lux said, even scanning was automation for us at some point in time. Right? So then you look at automate, and then the next stage is digitize. When you say that I digitize, you are wanting to be one with the times. 2, importantly, it takes away one thing which Lux spoke about. It takes away the necessity to be physically present if you have to do business. Because when the infrastructure and when your APIs come into play, and there is a predominance of so many of the fintech companies which come in, you learnt another thing in lending, which was collaborate. Okay, so you collaborated with a lot of progressive-minded fintechs to say that I ride on them just like they rode on the APIs, to say, because that's how the infrastructure in the country was developing, to give an experience which is fast, which is quick, which is in line with the times, but at the same time had a lot of controls, had a lot more of diligence coming in, because you were looking at a broader infrastructure and a surrounding than just the customer. I think that was the 3 things. So when you simplify, eliminate, automate, that was the genesis of our Neo. When we did Neo as a startup, we were the first bank to get into Neo, and today Neo is one of the leaders of retail lending. But when you look at these processes and eliminate, it leads to this thing. The second thing is user interface. Okay? Because you have mobile phones across the country, but the interface or the maturity levels of the people are not the same across the spectrum. You're talking of loans from, let's say, 5 lakhs. You're talking of loans up to a particular category. To some it could be 3 crores, to some it could be 10 crores. But when you look at the lending spectrum, which is banks and NBFCs, you have to get the user to use it the way you have envisaged that it will be used. not in the way that they would think. But to get it envisaged in the way that you will want it to be used, you will have to think of how they will use it. That's the second change when we talk about digitization. The third change is, because this is mortgage, there are some things which are absolutely critical. Okay? One is, of course, the cash flows, where you can do a lot of digitization, improvisation, technology to use to get the cash flows assessment. The important thing is collateral. Okay? How do I secure that collateral in a country where the SROs are not fully digitized? So there is a leg which is a process of digitization. You are lending across the country. Madurai is not Mumbai and Thiruvananthapuram is not Tanjore. Okay, so there is the subtle differences that you have to realize when you digitize to say that I will be par for the course. That is why the need for physical officers at that location to know what are the practices there, because the practices are, after all, based a lot on, and mortgage loans is one loan. Whatever you digitize, it is a touch and feel business. Because the customer, for him, it is probably the biggest contribution he's making to the family. And it will continue to be like that till the time we are a developing and a country which is developing. Because for them, that is security. Okay? So when you look at all these pieces, that's where digitization will come in. In the control piece, it will take some more time. In the lending and in the processing fees, processing side of the business, it is much faster, and this thing. In the post-disbursement, it is also fairly well entrenched. That's my three thoughts.
Thank you. Thank you. I think panel is not the right way to justify the knowledge which is available here. Maybe master classes may work better, I think. But I'll pause. I think I thought we'll be able to ask more questions, but I'll do the reverse. Maybe I'll not ask questions. If there are more questions from the panel, we can take a couple of questions from the panel as well, right? So if somebody could help us with the questions. Yeah. And my request is keep the questions short. Sometimes questions are longer than the answers.
Yeah. Thank you. Very short question. For housing loans in the ticket size like less than 15 lakhs, how much digitization and the new India stack, say account aggregator, will help in the underwriting and making the process much faster? That's the simple question.
So I think account aggregator makes income estimation much faster, right? But only thing is that for, if you're talking about that particular ticket size of 15 lakhs, you're talking about affordable housing. And again, affordable housing is like, there are various categories of like stock available in terms of the ultimate mortgage, ultimate residence or the ultimate apartment or house, whatever it might be. So that portion is just not digitized. So you can have income estimation which will happen very, very fast. But again, you will fall off in the process of, the legal and technical, etc. in that particular segment. So I think, and Sameer, I think it's a very pertinent question in the sense that if you see the front end of income estimation or the front end of customer eligibility estimation has been digitized to a large extent. But what has happened is that the follow-up processes, legal and technical, finally the agreement, the interaction with the developer or interaction with the ecosystem is not digitized. And if you look at why the income estimation part or the customer assessment part has become better, because government platforms are actually, or public platforms, or what we call right now, public digital platforms, right? Infrastructure. That has developed in those sort of areas. I think one critical area which, the government can actually step in and look at digital. RERA actually has sort of to a certain extent institutionalized customer protection in the mortgage, in the industry, right? However, from an experience perspective, if some of this, or if there's a sort of a public platform, digital platform can be created, which takes care of the digitization of some of this asymmetry, that can actually leapfrog the industry.
So yeah, this is only a start point. Maybe more is required. Maybe we'll try a couple of more questions.
Myself, Kailas Rati. I have been thinking on an idea where property papers, the legal and technical, can be done by an agency, and the digital token can be issued on blockchain, which any of the NBFC or bank can be mortgaged. How do you respond to that kind of idea?
My suggestion, I think you can have a chat because the moment we get into blockchain, it's a different discussion. So I'm not against it,
So,
but maybe
it's,
will be
it's
used.
not the blockchain. Its question is about the business use case that.
No, I think this is not the time to
Sure, no
validate the use case, right?
Sure,
Very
no
open forum for discussion, so
Sure.
very difficult for them to respond. But if you want to take it offline, let's take
Sure,
it
I'll do
offline.
that.
Yeah.
Thank you everyone for allowing me asking a question to the honorable panelists. So like the headline of our discussion is if we can reduce the TAT from 3 weeks to 3 days with help of tech and all. Mr. Roy rightly mentioned the ecosystem is not properly digitized, though maybe the customer journey, not the legal, tech and many other things which are in the ecosystem. So my question is very basic to all of you, like how legal issues behind the customers or the vendors that you are onboarding might help you to reduce this risk side and with a reduced TAT. Is it important? How is it important?
So how important is legal to reduce this stat from 30 days to 3 days?
No, my question was like one part is digitization that will reduce the TAT, and if this digitization comes with the entire legal history against the property or the individual who is taking for the loan, right? So how important that is for you to check this within a reduced time?
So typically when we say legal, it is a legal title to the property that we are verifying. So when someone is buying a property or mortgaging a property, what we want to verify is the genuineness of the ownership, and by mortgaging that property, do we have a right to claim that property in case of a default? So therefore, that is the core of underwriting. When we lend money to a customer against a particular property, the core of underwriting is that does the customer have a genuine title to the property that he can actually mortgage to us? Therefore, we need to be certain that that title is genuine, and therefore we get title when mortgage is done. So therefore this is something, we've been talking about this, since the beginning. So this is a core of this whole thing. Therefore we need to get this right.
And apart from that, one is the ownership of the title, right? And the other way I'll put it here, like if I am going for a loan, my property is absolutely fine, but I do have legal cases behind me, which may put me behind bar for say
Correct.
6 months.
So the cases against you that can put you behind bars is a credit question. When someone says what is the profile of the customer, like he was talking about the income assessment of the customer, there is also credit evaluation is not just on the income, it is also on the background of the customer. There are background verification checks that RCU or the fraud control unit does those verifications. So therefore they will give a profile of the customer, and so therefore profile of the customer is an independent decision to the legal property. So therefore there are two parts to your question. If
Right.
there are legal cases against you that can threaten, your ability to generate income and pay, that's a credit call that, someone will say this person may or may not be eligible for a loan.
Hello.
Yeah,
Yeah,
thanks.
last question. So, hi, my name is Nitin Sawant from Oms Fintech. So, I want to understand your journey from 3 weeks to 3 days. How financial impact on the balance sheet side that happens to all in this journey on the housing balance sheet?
You want to take it?
So I'll break this up into two parts. Like when I spoke, I said that there are various layers, external agencies, internal teams. And I think JK said a few things about what you can eliminate, what you can simplify. So what happens in lending institutions or banks historically is that you add a lot of people. So sometimes for lack of technology or lack of process, you add layers of people. So you had a set of layers of people to actually get people to work. You have a set of people who are counting and passing information and a set of people who are actually doing the real work. So if you can use all of this to actually delayer and empower the people on the ground and train them and engage them, then their productivity, their unit economics will be so much better that at the end of the day, your revenue to staff cost, your jaws will look so much better that from an operating expense perspective, you will not be in a situation where margins will not remain in any business. So if it is a 1% return on asset business or in say some other affordable cases, it could be higher return on business. At all points of time, cost is going to be a certainty and permanent, while revenues may be uncertain. And you are in a situation where for say an NBFC, if you're not a bank, then I have to borrow from people like JK and lend to customers whom he also tries to lend to. So it's very hard. So the only leverage that you have is what you can control, the controllables, which is your staff costs, which is your productivity and your unit economics. That can only be done by making sure that the technology that you build or you buy is implemented, and also going back again and again to say if you use AWS or any of the other platforms to renegotiate a cost and make sure that the controllables are in control. That is the only way. And I think if you go through balance sheets of NBFCs, HFCs, right from the upper layer ones to the ones that have come up over the last 7, 8 years, 10 years, I think some of these key parameters like the number of people, the addition in terms of net balance sheet growth versus the net number of people, because impairments will catch up. It will be a cyclical business. So if you are in a mortgage business, you will be in a 30, 40 basis points credit cost business. And say there are people who operate at 3% NIM also. There are people who operate higher. There are people who operate lower. So once you find the sweet spot, you have to build that ecosystem around you to make sure that you keep saving where you can. You look at, say, some of the other markets, say Hong Kong or a Singapore, a multi-billion-dollar mortgage books at, say, 10 basis points of margin or 15 basis points of margin. So the whole institutions can get into stress if that 10, 15 basis points go away. Capital One, many years back, I think in the US, decided not to do mortgage business because it was not RAR attractive enough, or from an economic profit perspective, didn't make sense. So I think those times will come for people like us also in India. And if, say, SBI decides to do a lot more, their cost of funds will be so much lower. So it's, at the end of the day, a combination of what you do, because there is only so little that you can control in a non-bank ecosystem, that the controllables are only on this side.
Take side
JK,
what you
I think it will be good for you to give a quick perspective, JK.
Just to make it easier, I'll just tell you with an example. What we are trying to do when we digitize is simply somebody asked a question, how does it help you in productivity or how does it save your cost? In every process in a banking and financial institution, there is a maker and there is a checker. Okay, you go to the bank, you give your check, somebody looks at it, somebody checks it, then somebody gives a token and you get the money. All right? By digitization, we are trying to see if you can eliminate the checker, for example, and with its benefits. If there is a field where I am the borrower, JK is the borrower, my mobile number has to be entered. It is entered by, I am getting a loan of 5 crores. I look like getting a loan of 5 crores, so let's say I get that 5 crores. But that entry for that 5 crore loan is probably done by somebody, not to take anything, by a youngster who's 20, 21 years out of college, right? He has a field of 10 fields. So what does he do? Earlier, they used to type 0000 10 times. So that number will come JK Vishwanath 00000 10 times. It's entered. But what is the use? When JK Vishwanath is in default, I don't have his number. Or I have to search the file to say whether the number was correct. Okay, so you put validations to say mobile number means 10 fields only, not 11. Mobile number means numeric, not alphabets. Okay, so you try and put in this so that you eliminate, and this doesn't have to be checked. Now somebody makes it, somebody checks, you eliminate the checker. So one is you control at the time of making the application, it is faster. And not everything which is applied is entered into the system. It gets digitally transferred into the system. And then you build these control points. Therefore, it is faster, it is quicker. There is, of course, a cost to it. But always, you don't think about cost to revenue coming in immediately. Revenue will come in because there is enough need for
Any
loans.
period that you can specify, how much period it required to pay back the technology investment that you done?
Okay, it depends on the scale. Suppose you're completely building a new system. Okay, completely. You're taking away your entire system which you had and completely building up. It will take anywhere between 20 months to 24 months. In that period, you will make up the entire technology. And that's, I'm saying, because it's not just the system. You're changing servers, you're changing the entire infrastructure, you're training people, you have to get them to deliver, and depends on the scale. But roughly, it should be that range of time frame in which you look at it.
Thank you.
Just
Thank
a
you.
small question.
Thank you. I think we run out of time. No, we run out of time because we will have challenges. But thank you. I think this panel was full of power. I think tough to get all of them together. But thank you. Thank you for joining us, and thank you for asking questions and being a patient audience. Thank you. Thank you.
Thank you, Mr. Sameer Singh Jaini and all the panelists for this wonderful session.